SpaceX is officially a public company, but as the stock price climbs over the coming weeks, you might actually be the one getting stuck with the bill. Today's market surge was specifically designed to work against individual buyers. And while that sounds extreme, the numbers back it up. In New York, investment bankers are celebrate every time the stock ticks upward because they profit from a very specific clause they wrote into the deal. This secret clause in the lockup agreement is triggered by a higher stock price, meaning today's growth is actually a countdown to insiders selling off. To be clear, this isn't an attack on SpaceX's quality as a business. In fact, the company is undeniably impressive. They're out-launching entire countries and providing Starlink internet to over 10 million users across more than 150 nations. The company's defense contracts are massive, so the issue isn't whether their rockets can fly. The real issue is the massive divide between a fantastic business and a stock deal that is rigged against everyone except the initial sellers. The details of this trap are hidden in plain sight within the official SEC prospectus. Yet most media outlets are completely ignoring them. By the end of this, you will have a specific timeline of dates that matter far more than the current trading price. Let's look at the numbers. SpaceX is launching at a $1.75 trillion valuation, despite making only about $18.7 billion in revenue last year. That is a staggering $94 in valuation for every single dollar of sales, all for a company currently operating at a loss. Leading Wall Street researchers estimate the actual value is closer to $780 billion, which is less than half of today's opening price. This valuation assumes the company has already achieved total future success, leaving you to bear the risk if anything goes wrong. When a company first goes public, only a tiny portion of its shares, about 5% for SpaceX, is available for the public to trade. The remaining 95% is held by founders and early investors who are temporarily restricted by a lockup agreement. These lockups prevent a massive supply of cheap shares from flooding the market and crashing the price on the very first day. While most IPOs have a single 180-day waiting period, SpaceX created a unique staggered schedule with multiple release windows. They have 5 separate release phases, 2 windows tied to earnings, and 1 special trigger based entirely on the stock price hitting a certain level. Here is the part the news misses. If the stock trades 30% above its IPO price for a short window, another 10% of insider shares unlock automatically. The IPO price is $135, so any day the stock closes at or above $175.50 helps trigger this massive early sell-off. Traders were already pricing the stock at $150 before it even listed, meaning this threshold is only a 13% jump away from current expectations. Just 1 week of strong performance converts that exciting market pop into a green light for insiders to start dumping their shares. Now let's map out the actual calendar of events, starting from June 12th, when only 5% of the company is available to the public. Starting August 21st, 5 separate groups of 7% of insider shares begin unlocking every few weeks through late October. On top of that, a massive 20% chunk of the company unlocks just 2 days after the first earnings report is released. Another 28% unlocks shortly after the third quarter earnings report, which typically moves the market between October and December. Finally, by December 9th, the 180-day mark, every remaining restriction is lifted and all insider shares are free to be sold. In total, 83% of insider shares are eligible to hit the market before we even reach the 6-month anniversary. You should focus on this 6-month timeline rather than the chaotic price fluctuations of the very first day. There's also a key date in 2027. June 13th is the day Elon Musk himself is finally allowed to sell his personal stake. SpaceX designed this complex schedule to avoid the massive, headline-grabbing price drops often seen when lockups end all at once. Companies like Rivian and Uber saw their stock prices plummet double digits the moment their lockup cliffs were reached. By staggering the releases, SpaceX hides that selling pressure behind a dozen small dates that average investors won't even track. This setup also helps the stock join major indexes like the NASDAQ 100 much faster, forcing passive funds to buy in. New rules allow these indexes to treat the small amount of trading shares as if they represent a much larger portion of the company. This creates massive, forced buying from institutional funds, effectively providing a buyer for all those insiders who want to cash out. This isn't a secret, but it is buried in 150 pages of legal text that most people buying on their phones today will never read. History shows what happens next. Palantir and Rivian both saw significant crashes once their insiders were finally allowed to exit. SpaceX's premium is even higher than those companies, making the potential for a painful correction even more likely. While Elon Musk's one-year lockup looks like a sign of confidence, it actually leaves him protected while every other insider exits first. Early employees in venture capital firms have windows to sell to you long before the founder ever has to move a share. You don't have to ignore the company entirely, but you should consider a path of patience over following the hype. If you wait 6 months, the forced buying will be over, the earnings data will be transparent, and the insider selling will have leveled out. Mark the dates from late August to late October. That is when reality will begin to replace speculation. The best companies remain successful for years. You never needed to be there on the very first hour to build wealth. Learn to look at the mechanical structure of a deal before you ever listen to the headlines. The market will always be loud today, but the calendar is where the real decisions are made.